Good morning, everyone. A very warm welcome to the 16th Monthly Indirect Taxes Colloquium, March 2023, organized by Bill GST and Tax Connect. I would like to introduce our speaker, Mr. Vivek Jalan. Mr. Vivek Jalan is qualified chartered accountant, qualified LLM and LLB. He is the chairperson of the Indirect Tax Board Group of the CII. Also, he is the chairperson of the Fiscal Affairs Committee of BCC and I. He is the regular speaker of various professional forums on the key areas of direct and indirect taxes. During the session, please put your video and microphone off. If anyone has any query, please write in the chat box. We will answer all your queries at the end of the session. Now we request our speaker, Mr. Vivek sir, to take the session forward. Over to you, Vivek sir.
Thank you, Mushmi. And I'm audible, no?
Yes, sir.
I'll just share my screen. Is the screen visible?
Yes, sir. Visible.
Okay. Okay. So, good morning to all the participants, and thank you for joining this 16th colloquium on indirect taxes organized by us in association with Will GST. And thanks to Mr. Samir Singh of Will GST in absentia for partnering with us to hold these colloquiums every month now, almost for the last 1.5 years or so. Friends, we are at the end of another financial year of GST. We are at the book closing time. And now GST professionals, tax professionals are a very, very important part of the book closing period as we approach 31st March. The finance department, our CFOs, many CFOs are here. Our marketing teams, our production teams, our operations teams, they come to us with various queries. Our goods are in production. Can we show an invoice now? Can we make the invoice now? Movement will happen on 1st of April. Our material is ready with the supplier. If he dispatches now, can I take the input tax credit? What will happen in case of bill to ship to transfers, right? And so on and so forth. Amidst all this, day before yesterday at 11 o'clock, the Ministry of Finance circulated the finance bill as amended and passed by the Lok Sabha, and now it will be passed by the Rajya Sabha, and after President's assent, the Finance Act 23 would be enacted. There were many amendments in the Finance Act proposed, which is to be passed, which is now passed by the Lok Sabha. In GST specifically, people think that budget has not much relevance in GST. I can tell you the major amendments in the finance bill was on GST provisions. So amidst the year closing, we have to go through that also and keep ourselves updated. And as jurisprudence also evolves in GST, few very, very important judgments as far as disallowance of ITC is concerned. What happens when the supplier does not pay to the government? Various important judgments of the High Court as well as the Supreme Court in these matters have come. So this moment was apt to hold this colloquium as we enter this financial year, and we'll discuss all of this, including various other important judgments and issues like warranties. I'm sure many people from electronics, electricals, white goods industries, auto industries would be in this colloquium, either from the client side or from their industry side. Warranty supply is a big problem in GST. We have represented through various chambers, through various associations before the Ministry of Finance, before the state commissioners. So we'll just discuss those issues over here. And also now, as we enter into the new year, the time to clean off our balance sheets for the old VAT cases. There are various very lucrative schemes, I would say, from the government, state government side to clean off the balance sheet. And I would say many dealers who were erstwhile registered in VAT and central sales tax, entry tax across states should take this scheme even when they feel balance of convenience is in their favor, and clean their balance sheet from all the erstwhile VAT, central excise, central sales tax cases. So friends, first and foremost, what is there in the finance bill as amended and passed by the Lok Sabha? The biggest amendment under GST and indirect taxes is the amendment of section 109 and 110 of the CGST Act, which lays the foundation of formation of the GST tribunal. I am sure all of you would be waiting. In fact, the time of formation of the tribunal has long passed. I would say this should have been done 2 to 3 years before today. Already there are more than, I would say, 30-40,000 cases across the country which have been passed by the appellate authorities in the first stage, either in favor of the revenue or in favor of the taxpayers, which is pending because tribunal is not formed. And more so, now various state governments, wherever the first stage appellate authority has disposed of the cases in favor of the revenue, the state commissioners and departments, they are starting recovery proceedings also. So we'll come to that. But section 109, that is the important section to understand. Maybe it is not that important. These are administrative provisions for formation of the GST tribunal. But friends, we are at a very, very important landmark time in history where we are witnessing the formation of the GST tribunals, which will deal with matters of GST in the next at least 20-25 years. I'm sure all of us who are in this webinar would be either practicing from the client side or from the industry side over the next 20-25 years. So it is important to understand how the GST tribunal would work and specifically how it would impact us. So first, why this delay for information of the GST tribunals? The delay was as usual in almost all matters of GST now, was because of a deadlock between the center and the states. The center wanted a national tribunal with state benches, But the states wanted the state-wise tribunals which would be independent, and all the coordinate benches would be independent, because they wanted their say in the tribunal. Also, their verdict should also be taken in the tribunal when they deals with matters. However, as the case is that the center's view sustained, but there was a midway which was found out between the two asks of the center and state. So now there would be a national tribunal with its HO at New Delhi, which would be headed by a president who would be a judicial member, a judge of the Supreme Court, or the ex-chief justice of a high court. And there would be a member from the center as well as the state. Which state is not specified. Thereafter, there would be state benches, which would be, you can understand them as a branch of the National Tribunal at the center. However, the midway which was found is that each state bench, and there could be more than one state bench, right? So for the state of, you see, Maharashtra, there could be a state bench in Mumbai, and there could be a state bench in Nagpur, because it is a big state, and more than big state, because it is a state where 20 to 25% of the business of the entire country happens, vis-a-vis, let us say, the northeastern states, where business may not be as much as Maharashtra. So there could be one or more state benches, but which would be regulated by the New Delhi National Tribunal bench. Each state bench would have 4 members, 2 judicial members. In the press conference apropos the 49th council meeting, the Honorable Finance Minister and the Revenue Secretary had said that one judicial member would be from the center, and the other would be from the state, but thereafter possibly they would have thought about it, that how could a judicial member be from center or from state? He should ideally be an independent member. Therefore, there would be 2 judicial members, whether from state or center, that is not specified. They would be selected by the committee consisting of various members, including the chief secretary of the state and the high court chief justice of the state. And there would be 2 technical members, one from the center, one from the state. Both would be members who would be of a high rank and who have more than around 25 years of experience dealing with either GST or erstwhile VAT, Central Excise, Service Tax, etc. Important point for all of us who would be appealing to the tribunal going forward. The matter would be heard, in case the matter is below 50 lakh, by only one member, technical member. If the matter is more than 50 lakh, it would be heard by a division bench of one judicial member, one technical member. Now, which of these members, which bench would take up the matter? That would be decided by the vice president, who would be one of the 2 judicial members who is more senior. The president at Delhi could also distribute the matters to the various state benches. However, Logically, if you are, say, in the state of Haryana, and if a bench is at Gurgaon, naturally your matter would be dealt with by the Gurgaon bench, right? However, in case your matter is, say, dealt with by the bench consisting of one judicial, one technical member, and both of them do not agree with each other, right? Thereafter, your matter can be transferred to any other state also. If there is another bench in the same state of Haryana, it would be transferred to the next bench. Or if there is no other bench in the state of Haryana, it could be transferred to another bench in another state, and you have to represent over there, and thereafter the majority decision would prevail. It could also be transferred to the national tribunal in case of disagreement between these two members. Friends, very, very important point. Some state officers, central officers are here. I understand. Very, very important points, right? The national bench, as per section 109, would be exclusive bench for dealing with place of supply issues. However, it is not that it will only deal with place of supply issues. It can also deal with any other matter which it might deem fit or which might be considered fit. So in case a matter is considered fit, it can be dealt with by the National Tribunal bench also in New Delhi. Irrespective of that, you would be from Tamil Nadu, say. Very important. Possibly going forward, where a taxpayer has a common issue across various benches, just as it is done in the Honorable Supreme Court, all matters could be requested by the taxpayer to be clubbed and dealt with by the national bench itself. So that has been, scope has been kept. And I would say it is a important and a well considered thought. There are various other provisions. I could deliberate over this for the next 2 hours itself, because I have been very closely part of the coalition where we have recommended to the center and state governments on the formation of the tribunals. But you can go through the PPT at your own pace, because it might not be relevant for the audience at large other than those practicing GST going forward. However, friends, what would be important for all of the audience at a large over here is that what to do in case your matter has been disposed of by the first stage in favor of the revenue, and the department initiates a recovery proceedings. Well, circular 132 of CGST provided that where a matter has been disposed of by the first stage in GST, and where the taxpayer or the revenue wants to file an appeal going forward against that matter in the tribunal, then the time period for the matter which is pending till the formation of the tribunal would not be counted as in the limitation period. However, this circular does not bar the department from initiating recovery proceedings, and on this basis, various authorities, commissionerates, and directorates across states have initiated recovery proceedings against the taxpayer. However, various high courts, including High Court of Odisha, Bombay, Jaipur, matters are pending in other high courts also. Various high courts have held that in such a case, in case the taxpayer pays that amount of pre-deposit which it would have paid had the tribunal been formed, then the matter should be stayed. A case in point is the matter of Surat District Cooperative Milk Producers Union Limited versus Chief Commissioner of CGST, Bombay High Court, wherein the Honorable High Court has held that in case 20% of the disputed tax plus admitted tax is deposited by the taxpayer pending the matter being filed with the tribunal, then the matter should be considered as stayed. Various commissionerates and directorates have followed this judgment and other judgments, and in case you have this kind of an issue with your client or with your company, then you can make a petition on this judgment and the doctrine of impossibility, that pending the formation of the tribunal, you are barred by the doctrine of impossibility to file anywhere. There is no machinery to file the petition where you feel the balance of convenience is in your favor, and therefore the matter should be stayed. Most of the states as well as center commissionerates, they are taking a view that yes, in case it is done, then the matter should be stayed. However, in case the matter is relating only to interest or only to penalty, then as per the section 107 of the CGST Act, there is no requirement of making a pre-deposit of the disputed interest or penalty. Pre-deposit of 20% is only applicable on the disputed tax amount. In this case, no pre-deposit should be required by the revenue authority. That is our view in this matter, and by and large, it is being accepted by the revenue authorities across the country. The other important amendment in the Finance Bill 2023 is amendment which was proposed in the Finance Bill in section 23 subsection 1 now has been transferred to section 23 subsection 2. I would not go into the nitty-gritties much of the law. However, due to this amendment which was proposed in the Finance Bill, it was proposed that those taxpayers who were providing 100% exempt goods or services but were required under section 24 to take mandatory registration because they were receiving certain services which were under reverse charge mechanism. Now those taxpayers, due to this amendment, would not be required to take a compulsory registration and with retrospective effect from 1st of July 2017. However, due to this amendment in the Finance Bill itself, moving this amendment from 23(1) to 23(2), now this category of taxpayers would be notified. So, not for all the taxpayers who are liable to take registration just because they are receiving reverse charge services, for them, for all, it would not be a blanket amendment. However, those taxpayers would be notified who are providing 100% exempt goods or services but are liable to take registration only because they are receiving certain services or goods liable to reverse charge. For them, this compulsory registration would not be applicable with retrospective effect from 1st July 2017. Okay, Mr. Ramesh's slide has not changed. Moshmi, can you see section 30 on the slide? Uh, Moshmi or Avik, can you see section 30 on the slide?
Yes.
Yes, sir.
Yes, okay. Next amendment is under section 30. Now, this is a welcome amendment. In fact, there is an amendment under section 30 and subsection 62. I would take both of them at the same time. Section 30 is in case your registration is cancelled, then what is the time barring period for application for revocation of cancellation? Section 62 is for best judgment assessment for non-filers. In case you are not filing your returns and an assessment orders on best judgment is passed, then if you file your returns, then would that best judgment prevail or not prevail? And what is the time barring period for filing your returns after you receive a notice for non-filing under section 32, under section 62? In both these, there is a welcome amendment. For revocation of cancellation, many courts have held that this time barring period for application of revocation of cancellation of 30 days, once it passed, then the officers, they were not allowing revocation of cancellation, and the taxpayer was in a fix. He wanted to do his business. Yes, he has non-complied with some laws for which he was his registration was cancellation, but he could not be left remediless. So now they have amended this, and the manner of revocation of cancellation would be provided by notification. And I would say that this notification would require that in case the taxpayer wants to revoke his cancellation, if he pays all the previously demanded tax and interest and penalty, then his revocation would be approved, and his registration would be revived, irrespective of the fact whether he has filed his revocation for cancellation application within the time period allowed under section 30 or not. Similarly, in case you are a non-filer and even after 60 days of receipt of the notice, you do not file your returns and an best judgment assessment order is passed against you, but after receipt of the best judgment order, then you file your returns, and according to your self-assessment, if your tax is self-assessed tax is lesser than the best judged tax, then the best judgment assessment would be withdrawn from the date when you pass or file your returns, right? And of course, thereafter, the returns would be assessed or adjudicated in the normal course of business. However, you have to pay interest and penalty as applicable. That would stay notwithstanding. Now, whether this interest would be on the best judgment assessment tax liability or your self tax liability, that is not provided. However, interest is always on the amount which is due to the government, and I would say that interest in this case should be applicable rightfully only on your self-assessed and adjudicated tax. Amendment under section 39 of the IGST Act, wherein 39 has been scrapped off the IGST Act. You would all remember that provision to section 12 subsection 8 of the IGST Act was also scrapped in the Finance Bill 2023. Now, what are these two amendments? Well, in case of transportation of goods between destinations, the place of supply was considered to be the place of the destination of the goods. This led to various anomalous conditions, wherein, say, for example, if we take provision to section 12 subsection 8, then say a company A was in Odisha, he wanted a transporter, a freight and forwarding agent to take the goods from his factory in Odisha to Japan, and that freight and forwarded is in India. However, in that case, the place of supply was the destination of the goods and place of supply was Japan. And therefore, this RTP in Odisha, he could not take the input tax credit because place of supply was in Japan due to provision to section 12 subsection 8. Similarly, in case the taxpayer is in Odisha and the freight and forwarder is outside India, then due to this section 13 subsection 9, in a similar transaction, the place of supply was Japan, and again, this person in Odisha could not take the input tax credit in this case because place of supply was considered to be the destination of the goods in Japan. However, after scrapping off this section 13 subsection 9 of the IGST Act and provision to section 12 subsection 8 of the IGST Act, now the place of supply in case of transportation of goods would be the place of the recipient, right? So in this case, who is the recipient? In my example, he is the factory owner or RTP in Odisha who is receiving the services of the freight and forwarder who is taking the goods to Japan. Therefore, the place of supply would be considered to be as Odisha, and the Odisha RTP could take the input tax credit rightfully. We have discussed this provision to section 12 subsection 8 in our last colloquium which we held on 2nd of February, just after the budget. You can go to our YouTube channel on YouTube and you can find it out for further and detailed discussion where we have discussed this clause. What was represented in the post-budget representation by the industry which was not accepted? Well, CSR activities, ITC, would be blocked going forward after enactment of the Finance Act and subsequent notification. This was represented by industry but was not accepted. So section 17(5) FA prevails. So all of those corporates who are spending for CSR activities from the day on which 17(5) FA is notified, from that day, input tax credit for CSR activities under section 135 of the Companies Act would not be available. I have always answered this question. Again, you can go to our YouTube channel. We have discussed CSR in great detail, not only under GST, but also its implication in income tax, section 37, section 80G of income tax. And we have presented our views on CSR in detail. You can go and to the channel and have a view of that. Well, what has not been accepted, and mind that it is very, very important because it is retrospective from 1st of July 2017. So I would tell in very crisp, briefly, right? It would be applicable to almost all of the audience present over here. In case from the day of inception of GST, from 1st of July 2017, you have made us import of certain goods and you have warehoused those goods under section 57, 58, 65 of the Customs Act. And when the goods were warehoused itself, you have sold the goods. Then this sale of goods during the period of bond would be considered to be neither a sale of goods nor a sale of services under Schedule 3, right? However, it would be considered the value of the sale or the value which may be defined going forward would be considered as exempt turnover. Crux of the matter, in case you have done certain bond sale from when? 1st July 2017. Please do proportionate ITC reversal. Next question is whether interest would be charged or not for the earlier periods ITC reversal. I am sure this would be litigated because the revenue authorities, as per the law, cannot give a relief of interest. However, taxpayers' claim would be that interest should not be applicable because this was a retrospective amendment which was understood and enacted only now, right? So friends, please go through your transactions, and this is something which is important and you should review and act upon. Another very important provision under income tax. As we all know now, yesterday only I was, I would say, called before year ending. I would come to those year ending activities. All tax practitioners are called by the owners and the managing directors also nowadays because everybody is so concerned about taxation. So 194R was amended by this Finance Bill 2023 and this amendment stays wherein even a cash payment would be considered to be as a benefit or perquisite liable to TDS under 194R of Income Tax Act. The moment it would be under 194R, it would reflect in your 26 AS and such transaction, I am sure would be at least contested by the GST department when reconciliation with 26 AS happens. And that is precisely one of the reasons why yesterday I had a meeting with one of the managing directors and he said, how can a GST department look up at 26 AS, that is income tax, CBDT? Friends, we have to explain to our seniors, our managing directors, our partners, that there is an official memorandum of understanding now between CBDT and CBIC for exchange of information. CBDT can act on CBIC's information and vice versa. So now this cannot be disputed. And that is one of my points in this next section, what you should do for a year ending activities. First and foremost, there is a recent advisory. There were some taxpayers, while this advisory, some have said that this was ill drafted, but India is a diverse country. There are so many RTPs, and even if one or two RTPs are facing a genuine problem, then the government has to come out with an advisory to fix that problem itself. So even I am not aware as to which RTP was under hardship due to this glitch. But of course, there are certain 6-digit HSN code or SSE code, HSN code, SSE is always 6-digit. So there are certain HSN codes where 6-digit is not accepted by the IRP portal. In case you are such a RTP, then you should use 8-digit and not any artificial 6-digit till the IRP is rectified. Well, now the new year, new financial year is beginning, and my submission to all of you and all the taxpayers, we are advising that try to use 8-digit HSN codes, even if you are a taxpayer with turnover of less than 5 crore rupees. It is always much safer to use specific 8-digit HSN codes due to the dynamic nature of the, you see, laws which are now prevailing globally. Next, credit notes. Friends, be very, very careful of the credit notes. There can be two kinds of credit notes. I have deliberated it in many videos. You can go on to our YouTube channel. I have deliberated it in the last, I don't know how many colloquiums, how many seminars. And the following is our legal submission. Friends, there are there are two kinds of credit notes. One commercial credit note, no DGST impact. That can be disputed by the GST authorities, also specifically the CGST authorities, saying that the recipient has received this commercial credit note due to a service which the recipient has provided to the supplier of the goods. To take care of this risk, and I have represented this before the highest authorities in the country, across states, in New Delhi, and this is of course under consideration at the highest level in the GST Council. But till consensus is achieved and a circular is arrived, right? Or circular is issued, even for commercial credit notes, friends, please have an agreement specifying that this commercial credit note is due to a post-sale discount. Agreement does not mean you have to get into a bond paper agreement. No, at least get an emailer from your supplier regarding the post-sale discount and the issuance of the commercial credit note due to the post-sale discount. This is a very, very important year-ending activity. Another important year-ending activity is in case you have issued a GST credit note, do get a confirmation from your customer who is the recipient of the GST credit note that they have reversed the corresponding ITC, or they have not taken the ITC ab initio. Friends, this is under section 15 subsection 3, while you as a supplier or issuer of commercial credit note may argue that you are not duty bound to ensure this, yet it is a mandatory prerequisite of issuing commercial GST credit note under section 15 subsection 3. Even if your customer does not revert to your communication, even then, at least you should make a communication to your customer and keep it in your file. Take a printout of that email and keep it in your file. That would help you going forward in your assessments, investigations, etc. Now, as I discussed at the beginning of this webinar, your production departments, your operations departments, your sales and marketing department would be inquiring as every year, can I make a bill when my goods are ready and would be finally produced by 31st March? What does the GST law say? Even if my e-way bill is made on 1st of April, well, the GST law, section 31, requires that an invoice can be made before or after, before or at the time of removal. Therefore, even before the removal, an invoice can be made, sales can be booked. As per the GST law, if the supplier pays the output GST liability to the government. However, if the material has not moved, of course, you have to show it as stock in transit. If you are a recipient of this kind of a transaction, say if you are the recipient or a customer, then this value or this ITC on this stock in transit would appear in your 2B, where you will not be eligible to take the input tax credit. Correspondingly, this would reflect in your table 8D of GSTR 9 as a positive value. However, friends, I understand that offhand maybe you would not remember what is 8D of GSTR 9, but 8D of GSTR 9 is the difference between what is available in your 2B and what you have taken in your 3B. So ITC for stock in transit would be appear in your 2B, but you can take the ITC only after you have received the goods in the next year. So this, as per circular 170, should all the input tax credit in your 2B when you file the return for March, it has to be taken in your GSTR 3B, and this amount of ITC for this stock in transit has to be shown as temporary reversal under 4B1. Which brings me to the next point of compliance, year-ending compliance, year-ending return. In the coming financial year, in April, what you should do? You have to see if you are compliant with Circular 170. I am sure most of the large taxpayers are compliant with Circular 170. Again, I would not deliberate on 170 due to paucity of time, but you can go to our YouTube channel and we have discussed in detail in August 2022 in our video on Circular 170. So If you have complied with 170, you would have shown various temporary reversals under 4B1 of GSTR 3B. You have to make a reconciliation of all these temporary reversals and ensure that you do not lose out on the input tax credit. You have to ensure that all the temporary reversals which you have shown during the year in your 4B1, in GSTR 3B, all input tax credit you take in the coming months. Clear? Now, next. In case of your production department, your finance, your sales and marketing will come to you and say, specifically your CFOs, some CFOs are here also. You would ask a question that, boss, I want to take input tax credit where my supplier has shown a sale. What is my fault if my goods are in transit? Why will I not get the input tax credit? What kind of law is this? Many a times as tax heads or tax consultants, we have to hear this. What is kind of your GST law? Then our legal submission in this matter, a solution is you tell your CFO, sir, makes the contract X works. Let the supplier supply X works. Then under section 16(2)(b) proviso, you can take the input tax credit when you receive and the property is transferred X works on 31st March. Take the input tax credit. I have no problem. I will defend your case. Then the CFO will ask, or your client would ask that what happens if I don't go? What happens if my transporter takes the delivery? You can say that yes, 16(2)(b) proviso allows, even if your transporting agent takes the delivery of the goods on your behalf, go ahead, take the input tax credit. It is allowed under section 16(2)(b). Filing of LUT, if you have forgotten for 22-23 also, immediately file your LUT. For 22-23, it is allowed by the GST portal even now. QRMP scheme taxpayers, you can opt for QRMT scheme by 30th of April. Invoice series. Now, very, very important, friends. All of you would be starting new invoice series from 1st of April. It is our legal submission. And we have seen various kinds of problems. Please do state-wise invoicing. Please have state-wise invoice series. There would be various kind of problems. We are contesting in all the states. Why state-wise trial balance is required? I don't have facility to give state-wise trial balance. I am sure many of my friends are here who would not agree with me, right? But friends, state-wise trial balance or trading account, by whatever name you call it, you have to make going forward. We have discussed with so many state commissioners, so many central government commissioners, chief commissioners at the highest level in the ministry. Everybody is clear. State-wise trial balance is mandatory till every state is a distinct person under GST. Therefore, it is our legal submission. This is the time. 1st of April, please advise all your clients or your companies to make state-wise invoice series. Now, some companies, there are state-wise invoice series, but debit note, credit note is common for across the country. Please, if possible, do not do that. Debit note, credit note, bill of supply, invoice, even delivery challans, payment voucher, receive vouchers, self-invoicing, please do state-wise serial numbering. Of course, matching of 2B, 3B, that is important. If you're not filed, you see, complying with circular 170, please do comply at least from the next financial year. Maybe you did not want to comply from the mid of the year, but please go through circular 170. Again, you can go through our YouTube channel, August 2022. We have a video in detail. We have explained circular 170. We have an article on Will GST also. You can access that, right? That you can go through this. There are various other compliances at the year end. You can go through Form 26AS versus 3B compliance reconciliation. While again, like the managing director of one of the companies, he was discussing why do we want to reconcile 26AS with 170? Can we do a total reconciliation of 26 with GST return? In totality, answer is, friends, you can do a total reconciliation with 26AS, but it is a fact that under one section 151 of the CGST Act, your GST authority can write to your supplier and your supplier will give him invoice-wise details of TDS deducted, which is reflected in your 26AS. So invoice-wise matching of 26AS with GSTR 3B is mandatory. Some now reverse charge interest calculation. If you have not paid your reverse charge liability, right? Yeah, please do type your questions. I can see certain questions. We will answer all of this in the last 15 minutes. Reverse charge interest calculation. If you have not paid your reverse charge liability within 60 days from the date of the invoice, you should pay your interest. Now, again, how to calculate this interest? This we will discuss. We have a specific, uh, segment for this section 50 discussion. Only 2 to 3 days before, I was discussing with a senior revenue officer, and he said, when I'm, training my officers, I cannot make so many examples which can encompass section 50. There are so many examples. There are so many permutations which can happen in section 50. So you see, interest under GST, this is a code in itself, I would say. We would discuss some of the pointers. Rule 37A, this is relaxation which is provided from 28th of December 2022. Now you can take the input tax credit on a provisional basis, even if your supplier has not filed his GSTR 3B. You have to see your 3B compliance of your supplier only once, when on 30th of November 2023. Before that, you can take the input tax credit. However, if your supplier still does not file 3B by 30th of November 2023, then you have to reverse the input tax credit corresponding without interest, no interest liability. So if you have not taken the benefit of section 16 read with rule 37 capital A, you can start taking the benefit from the new year. Credit notes, debit notes, mandatory required to be linked with the original invoices. Some of my clients, some of the taxpayers, they argue, sir, GST portal में तो February 2019 से liable नहीं है. Credit note linking with original invoices. Friends, our legal submission is section 15 still requires credit notes to be linked with original invoices, still requires debit notes to be linked with original invoices. Please link your credit notes and debit notes with original invoices. Otherwise, there would be trouble, big time trouble during assessments. Cross charge versus ISD. We have discussed this so many times. in our webinars. Cross charge is something which is not there in the GST law. If you are cross charging and you want to switch to ISD mechanism, please do so from 1st of April 2023. It is our legal submission. There is no concept of cross charge. Even if you are cross charging for your employee cost, there is no such provision in the GST law which mandates you to cross charge your employee cost, etc., etc. You can stop this practice from 1st of April 2023. Credit notes netting off with ITC from 1st of February from the return which you have filed in February for the period January 2023. Now the ITC in 4A5 has to be netted off with the corresponding credit notes. If you have not been following this, please do follow this from the ensuing return. Again, if you want to understand this, we have a video on our YouTube channel. You can go through that video at your own pace. So friends, now you see there is a new dispensation in circular 183 for 17, 18, 18, 19. In case you have a 2A, 3B mismatch, then you can take a declaration from your suppliers for these 2 years, and on the basis of declaration, your case would be closed. As per 183, if you want to understand this again, you can go through our YouTube channel. For, in the interest of time, I'm not going through these provisions. However, now what do you do in 1920, 2021? From 1st of January 2022, you are required to match 2B with 3B. You cannot take ITC which is not there in 2B. But before that, 1920, 2021, if your supplier has paid the tax, but he has not filed that one correctly, it is not coming in your GSTR 2A or 2B, then what do? The Honorable Apex Court in the case of Bharti Airtel in November 2021 had held that 3B cannot be retrospectively amended, but that same analogy would not be applicable in GSTR 1. The Honorable Madras High Court in the case of Deepa Traders has distinguished this judgment and held that in such cases where supplier has shown, say, B2B invoice in B2C and it is not reflecting in the recipient's GSTR 2A, then the supplier should get an opportunity of rectifying his GSTR 1 even post the time barring period of 30th September that was prevailing. So in case of such a case, you see your recipient, if they get a show cause notice as a supplier, they come to you and block your payments. In such a case, Deepa Traders Madras High Court judgment that can come to your rescue. Well, 3B versus 2B mismatch cases, 16 2C cases. Your ITC is not reflected in your 2B. Your supplier has not filed his GSTR 3B. Would ITC be available to you? Friends, there are various landmark judgments. One of the Apex Court in the case of Ecom Gill, in the matter of Karnataka VAT. Second, by the Delhi High Court in the case of Balaji Exim. And third, under 16(2)(c) in the case of Pinstar Automobile. We will come one by one. You can go through this at your own pace. I will directly come to the takeaways, right? And this is important for all of you. from a combined reading of these three judgments, there are now two levels of availing ITC and claiming ITC, or claiming ITC and thereafter litigating, I would say. First step of claiming ITC or availing ITC. What do? You need to ensure you have the tax invoice. Many taxpayers ask me, if I have the scan copy, will that do? Nahi chalega. You have to have either ink signed hard copy of invoices or digitally signed copy of the invoices. Scan copy of signed invoices will not do, friends. And we have fought a case in Telangana on this matter. And I would say even the taxpayer was cursing us that we are making them take out 12,000 odd invoices, but that had to be done. So you have to have your invoices. You have to file your returns. After 1st of January 2022, ITC should be available in your GSTR 2B. You should have received the goods or services, and you have to substantiate you have received the goods or services. This is very, very important. And the government has tools to check, including FASTag, whether your goods have moved or not. And to claim ITC, you have to prove that your goods have moved. How do you prove that? 7 precautions. Number 1, you have to have your e-way bill. So e-way bill reconciliation with not only GSTR 1, but GSTR 2B, mandatory. Number 2, you should have the consignment note copy. Your payables department, who is processing the payments of the supplier, kindly instruct them to even try to have the consignment note copy, the freight payment details for the consignment, receipt details of the goods, GRN. Your dealer should be physically present, right? You have to do your vendor due diligence very carefully. Your dealer should not be missing. If required for major dealers, major suppliers, please go to the supplier premises, click photographs that he is in existence. Dispatch address should be present. Now, many of the, I would not want to name an industry, but specifically it is prevalent in the scrap trading industry. Scrap moves from midway. Truck chal jata hai midway. Truck is loaded in the midway, somewhere in the road. Nahi chalega. It will be very difficult, friends. If the truck is loaded and if there is an interception, you would be at a loss, because that is not your official dispatch address in your e-way bill. So dispatch address should be there. Your vehicle should be uploaded from the dispatch address. If possible, have a weighment slip. Especially again, I would say scrap dealers. And last, if those suppliers are liable for e-invoicing, ensure you have a e-invoice from the suppliers. Now this is goods. This is very relatively easy. What in case of services? Can you have business auxiliary services provided by your supplier? No. you have to prove the business case of receipt of services. It will not do that you have received XYZ business auxiliary services worth 1 crore, where GST impact is 18 lakhs. No. Why have you received the business auxiliary services? Is your supplier identifiable? Is he genuine? Is he credit worthy? Is the value of your supply? You are receiving services of consultancy worth 1 crore rupees, where the best of the consultant would give you the same service for 10 lakh rupees. Not possible. It would be disputed. Have an agreement in place. And in case of related party service invoices, be very careful regarding the valuation and that any consideration other than the price has not been paid to the related party. And lastly, in case your supplier should have paid the taxes to the government, in case your supplier's registration is cancelled, ensure you have purchased the goods or services of before the registration was cancelled, not after the registration is cancelled. In case of bill to ship to transactions, I was seeing one question by one of the participants, where in the GST law it is provided. I would state something now which is not provided in the GST law, but practically it would be better if you have that. If a bill to ship to transaction is there, even if your supplier is present, if possible, ensure that your supplier, that is the shipper of the goods, he is also present. So this is stage 1 of claiming ITC. After this is done, then starts the litigating stage. If even after this, the department disputes your input tax credit, first, under 122(1)(a), the department might dispute that the ITC is fake, especially in case of bill to ship to transaction or in case of L2 supplies. So in case of Balaji Exim, the department disputed that the ITC was fake because somewhere, some supplier in the supply chain had taken the ITC without movement of the goods. Then in such a case, 122(1)(a) would not prevail, because it is not only sufficient to prove that you are the beneficiary of the ITC, but it is also required to prove from the department's point of view that the transaction had happened due to your instance. So no question of invoking 122(1)(a). The Honorable Apex Court's decision in case of Ecom Gill Coffee Trading Private Limited would prevail in this context. If your supplier's registration was cancelled ab initio, then if you have purchased from your supplier after the date of cancellation, then there would be a problem. But before the date of cancellation, then no problem is there. Next, just a second. In case your supplier is missing or bankrupt or has closed down a business, only then your ITC could be denied. But if this is not the case, then ITC cannot be denied. Press release dated 1st of May 2018 would come in your rescue, read with the Honorable Apex Court's decision in case of, Honorable Madras High Court's decision in case of DY Bethel Enterprises. Now, very important, I am dealing with such a case in one of our clients. Say in case your supplier has not filed his 3B, or it is proved that he has not paid the taxes to the government, and the department is or has initiated recovery proceedings against your supplier for the GST amount, can the department also initiate proceedings against you for reversal of corresponding ITC? Our legal submission is that Article 265 of the Constitution of India would prevail in this matter. And while the recovery proceedings are already on against your supplier for the same taxes, the department has no authority of law to collect the taxes by means of reversal of ITC from the recipient for the same taxes which it is recovering or in the process of recovery from the supplier. However, in a landmark decision last week in the case of Pinstar Automobiles, the Honorable Madras High Court has deliberated and held that section 16(2) subsection C empowers the department in such cases also as a protective step to ask the recipient to reverse its input tax credit till the time the recovery is not complete from the supplier. Friends, our legal submission is that this judgment would be challenged in the apex court, and Article 265 of the Constitution of India would debar the revenue authorities from taking such an action. And it is important to do supplier due diligence. We have a checklist for supplier due diligence. We will share this PPT with you. You can go through this at your pace, and specifically for the major suppliers, you should have, especially for large organization, you should have a process of vendor due diligence. Friends, sections 50, interest. I would immediately come to the takeaways. Again, interest, I would say section 50, I can deliberate for the next 3 hours on this. Number one, in case you have ITC in your ITC ledger and you have filed your 3B delayed, to the extent of ITC in your ITC ledger, no interest can be charged on you. Number two, if you have taken ITC wrongly, not utilized the ITC, no interest can be charged. Right? Number three, in case you have ITC in your ledger and you disclose your supplies of 1 month in another month, but constantly you have ITC in the ITC ledger, the department would contest that provision to section 50 subsection 1 would not be applicable on you. However, our legal submission is that it would be applicable, and in case, say for example, in the month of January 2023, you have ITC of 1 crore, you have not disclosed supplies of GST value of 90 lakhs. In the month of February 23, you disclose the value of the supply, where GST liability is 90 lakhs relating to January 2023. But constantly, even in February, you have more than 90 lakh rupees balance in your ITC ledger. Is interest applicable for you? The department is disputing that interest is applicable. Our legal submission is Circular 2626/2070, para 4 requires and empowers you to amend, again read with this judgment of Deepa Traders of Delhi High Court. One 3B can be amended by another 3B. So you are amending your January's return in February. It is not that you are disclosing the suppliers of January in February, right? So provision 2 section 50 subsection 1 would not apply. Interest is always compensatory, and in this case there is no loss to the department, and I would legally submit that even in this case interest would not be applicable. How to calculate interest in case of RCM delayed payment? I had said I would explain this. So for example, you have a bill of 1st of December 2022. The due date of payment of the bill is 30th of January 2023, and the bill is liable to reverse charge. You have a transporter's bill. You book that bill in on 15th February 2023 and make the payment under reverse charge on 20th of March 2023. How do you calculate interest? The RCM is due on 30th of January 2023, but it can be paid only in the 3B on 20th of February 2023. So 20th of February 2023 becomes the due date of payment. However, it is paid on 20th of March 2023. So you have to calculate the interest from 20th February to 20th March 2023, right? You can go through this video again. I am sure, possibly at the first instant, it would not be culpable. So this video of this colloquium would be uploaded. You can go through this again at your own pace. But this would be the calculation of interest in case of delayed payment of RCM. Same would be applicable for that 180 days delayed payment. If you don't pay interest now but pay the principal amount, would interest on interest be applicable? The Supreme Court in the case of Flora Industries have held no, but in the case of Deputy Commissioner of Income Tax versus MSM Satellite, it was held by the ITAT Mumbai that interest would be, the payment would be first towards the principal repayment, and then it would be applicable on interest, right? So interest on interest to this extent would apply. But again, it is a judgment in a different law by ITAT Mumbai. Therefore, you can distinguish it on GST law. Even if you have paid the principal now, interest on interest should not be applicable. Right? Now again, warranties in case of supplies, so many industries are impacted by this. The department's contention is that, say for example, you have supplied an air conditioner. Now that air conditioner is faulty and it is under warranty period, you supply a fresh air conditioner. Question is whether GST would be applicable on the warranty supply of air conditioner, or in case you supply parts of the air conditioner. Would GST apply on supply of parts of the air conditioner under warranty period? We have represented this. The matter is under consideration at the GST Council level. And our respectful submission in this case is that there is no applicability of GST on outward supply under section 71C read with schedule 1, because it is a matter of 71A. There is no question of reversal of ITC in this respect, because the cost of warranty supplies are included in the cost of the original air conditioner. And third, that there is no, even it is a settled principle in case of erstwhile Central Excise, same is applicable under section 15(2). So our respectful legal submission in this matter is that there should be no question of reversal of ITC or payment of GST on warranty supplies. Various SOD schemes of Maharashtra, West Bengal, Rajasthan, Kerala, and some other states are there, where you can clean your balance sheets and pay off your disputed VAT, Central Excise, entry tax, and other state tax erstwhile matters. You should take the benefit of these schemes and clean your balance sheets. The taxes, disputed taxes payment is only to the extent of 10%, 15%, 20% in most of the states. And I would say that even if the balance of convenience is in your favor, but rather than litigating, it is better to come clean and start GST with a clean state now. Refund of taxes during investigation in the case of Surtex prophylactics. It was held by the Honorable Karnataka High Court that in case, and many of you would be under hardship, whenever investigating authorities are at the premises, then there is some sort of pressure to pay some taxes at the investigation level. But or if not, whether or not you have paid under protest, in case you are paying taxes at the investigating level before passing of the adjudicating order, then you are liable to take, you are eligible to take refund of such taxes, because circular 296 of 2022 and board instruction number 1 of 2022 dated March 2022 by the CBIC investigation in GST investigation is very clear that no taxes should be demanded during investigation. Taxes can be collected only after adjudication is done and adjudication order is passed. Well, customs exemptions under 50/2017, they are disputed. Many a times you forget to take customs exemptions while importing certain material, then it is disputed by the department that when if you have forgotten to take exemption on a particular import, then you have to go to an appeal only, and only after you get an appellate order your bill of entry can be revised. Well, the Honorable Madras High Court in the case of Stanley Engineering Fasting India has distinguished the order of Supreme Court in the case of ITC Limited of 2019, and it had held that as per the Act, a bill of entry can be reassessed, and therefore a bill of entry should be reassessed, and exemption should be eligible to such an importer. Similar matter, similar order has been passed by the Telangana High Court in the case of Sony Industries Limited, right? And by the Mumbai Sestat also in various such matters. If there is a classification dispute, then there are many case laws. You can go through this at your own pace. Well, recovery and cancellation of GST cannot go hand in hand. That has been held in another decision of the Honorable Allahabad High Court. The matter in dispute in this case was that recovery was a cancellation of a dealer was initiated, and for the same dealer the department started recovery. So if the dealer is cancelled stating that he is not present, how can you start a recovery action against the same dealer? So the cancellation of the dealer GSTIN was revoked by the Honorable High Court in the case of Shyam Sundar Sitaram Traders by the Allahabad High Court. So friends, I see many questions now on the chat box. I would take all the questions now one by one in the next 10-15 minutes. Miss Khushbu Singh says RCM amendment with effect from date. RCM amendment would be effected from the date of notification of amendment of section 23. However, as stated that due to the amendment in the finance bill passed by the Lok Sabha, directly this RCM amendment would not prevail until notified separately by the CBIC. So you should read that notification carefully. Mr. Nagaraj says if we do not reclaim, what will be the impact of reversal in 4B2? You cannot 4B2, yeah, temporary reversal. I said 4B1. Temporary reversal is 4B2. No impact, but possibly your client or your company may be questioning you for loss of input tax credit. In case you do not want to reclaim, you have to change the head, try to amend your next 3B and show it under permanent reversal, reducing it from temporary reversal. Mr. Deepak says, which section requires matching of 2B versus 26AS? Yes, this was asked from me yesterday also, as I said, and there is a memorandum of understanding between CBDT, CBIC. In the Ministry of Finance, they are sitting on the same floor, right? So now there is a memorandum of understanding. As per that memorandum of understanding, data can be exchanged and you see, you have to prove. Blanket, they cannot say that just because 26AS is not matching, then your GST liability would be invoked, but you have duty bound to give an explanation as to why 26AS is not matching. Mr. Deepak again says why trial balance is required. Mr. Deepak, you can read Rule 56, Sub Rule 18, which requires you to give a complete information of state-wise transaction read with Section 71 of the CGST Act, which requires a trial balance on an equivalent to be made and be made available to the officers who access your business premises. If you are duty bound by another section to make a trial balance of or its equivalent, then you are duty bound to present it even under section 65 or any other proceedings you are witnessing. Under RCM, if I forgot to pay tax in the earlier financial year, can we pay now and take credit? Yes, you can on the basis of your self-invoicing. Mr. Indani says for financial year 22-23, also 30th November cutoff, since I feel it was given for financial 21-22 only. Sir, it has been amended and 30th November is applicable for this financial year. Also, it has been amended in the Act itself. Related credit note net off. If we do not take ITC on related invoice, how can we net off? Sir, Mr. Nagaraj, now you are duty bound by circular. You are not duty bound, but department circular is for the department. But you should take the input tax credit and reverse it under 4B. That is required as per circular 170, which we feel that you should be following that circular, right? However, if you have not taken the input tax credit, the department can always ask your supplier that they have to prove, and they can come to you under section 151 asking you to substantiate that you have not taken the original input tax credit itself. Mr. Giri says in case of bill to ship to transaction, on the direction of recipient, supplier dispatches goods other than recipient address, which is not registered under GST of the recipient. So in case transaction is valid or not, if so, as per which provision, please advise. It is a valid transaction. However, please add even post facto, please add this place of business in your registered place of business. You have to prove that this place of business was existing, and please add it in post facto in your registered place of business. Then it would be valid. Otherwise, it would be invalid because the department would dispute the fact of receipt of goods or services, receipt of goods. There are various cases, like in case of Sunil BD manufacturers, as decided by West Bengal ITAT, right? And also we see Flipkart business scenario where Flipkart purchases the good of RTP and dispatches to unregistered purchaser. So in this case, transactions are not valid. It means it is completely valid. If the supplier, the recipient does not take the input tax credit, then there is no question of dispute of ITC. Transaction is valid, ITC is not valid. Mr. Dipesh says we maintain canteen facility as per Factory Act, and we are taking services of third party to operate and maintain canteen. We recover nominal cost from employees. Please suggest GST implication whether we are eligible for ITC. What would be the GST rate supplier would charge, whether recovery from employee would be termed as supply? My question, yes, you would be eligible for ITC. Yes, you have to charge GST on the outward supply which you recover from your supplier, and your supplier should charge from your employee, and your supplier should charge GST at the rate of 5% in this case under restaurant service. Mr. Ramesh says, please elaborate interest on interest in GST on all supplies. Mr. Ramesh, say you have a liability of payment under GST. Say you are liable to pay certain tax in December 2022, you pay it in February 2023. Interest is applicable. You pay the principal in February 23. You don't pay the interest. You pay the interest in November 2023. Question is whether this interest amount would remain the same, or whether there would be more interest on this interest. Answer is, in Supreme Court has said there cannot be interest on interest. This interest which you would have paid in February 2023 would be same as that would be required to pay in November 2023. There would be no addition to the interest. Mr. Nagaraj says 1718 IGST payable is wrongly paid as SGST and CGST, and same has been rectified in Jan 18 3B. Is there any impact? Section 77 of CGST Act comes to your rescue. No interest impact, no impact in this case. Mr. Shiv Shankar says, what would be interest rate on ITC wrongly availed and utilized? 18% as per amendment to section 50. Yeah, we would share the PDF. Mr. Siddharth Jain says whether we have to reverse ITC or directly reduce from ITC if goods received in the next month. Mr. Siddharth, your question is not clearly understood. Mr. Shiv Shankar says export of free samples, whether GST applicable? Yes, GST is applicable at 0%. It is a zero rated supply, right? you can take a refund of input tax credit to this extent. Mr. Debashish Gangopadhyay says, kindly arrange to share PPT. Yes, any amnesty scheme relating to GST, there is an amnesty scheme for 99C that is not yet notified. It would be notified apropos the 49th GST Council meeting, but no amnesty scheme for matters pending in the first stage or post the first stage. Miss Pooja Advani says, if is self-invoice necessary for claiming ITC for RCM? Yes, it is necessary under section 16 of CGST Act. Miss Smriti says, if ITC balance in credit ledger in IGST, we have paid interest liability in CGST, HGST. Should we pay interest? Yes. Miss Shruti, you have to pay interest. Mr. Alok Mathur says, in case of GST liability under RCM is paid under 60 days, after 60 days, then am I required to pay interest even if ITC is available? Yes, you are required to pay interest due to time of supply provisions. Claiming ITC on revenue neutrality, that is not justifiable in this case. Mr. Shiv Shankar Shah says, we have erroneously claimed ITC on import in July 17, reversed March 18, IGST balance becomes zero in December 17, but we have CGST, SGST balance till March 18. Whether interest will be applicable? Yes, not only from December to March, but okay, December to March 18, yes, interest would be applicable. Whether interest will be applicable on debit notes raised subsequently, since at the time of issuing tax invoice we billed at lower rate inadvertently. Generally, I would answer your question in two parts. Generally, interest is not applicable in case a debit note is raised and the tax liability occurs after the date of the debit note. But in your case, it is a case of lower rate charged, and time of supply would be in this case from the date of the original invoice. So in your case, interest would be applicable from the date of the original invoice. Mr. Ajay Kumar says, mandatory in invoice series state-wise. No, Mr. Ajay Kumar, not mandatory for state-wise invoice series. However, you see, it is always recommended given the present scenario. Mr. Rashik says, we as purchaser recover GST tax from supplier because of invoice data not uploaded in GSTR 1. In that case, we paid through DRC 3. Our supplier still requires to pay GST, while the assessment or DRC 3, what we paid can be shown as paid indirectly. Can be shown, but department will litigate, but it is a valid claim. Supplier should need not pay the tax again. This is our submission in this case. Mr. Rashik says okay, that is answered. Mr. Deepak Kumar says, should the practice of cross charge be stopped from the next year, or an ISD registration will allow us to claim ITC for cross charges? Number one, cross charge should be stopped is our legal submission. Number two, cross charge cannot be done through ISD registration. It should not be done at all. ISD registration is applicable when you receive common services. So say in case of statutory auditors fees, then it should be routed through ISD registration, but statutory auditors fees cannot be cross charged, right? Can you route employee cost through ISD registration by cross charge? Answer is no. But cross charging of employees cost is not required under the GST law anywhere. I hope you are answered. Mr. Ramesh says, regularly filed 3B and 1, but missed to report a supply in 2018, paid through ITC in 2019, whether we can take the benefit of interest as per Circular 26. Yes, it is our submission under proviso to subsection 50, subsection 1. However, department would dispute this, but our legal submission is that it would be not applicable. Interest would not be applicable in this case. Mr. Rashid says we as purchaser recovered GST from the supplier because of invoice data not uploaded in GSTR 1. Okay, this is done. Mr. Ashish Singh says we have anchored an agreement between, okay, let us not take the names of people who supplied planning tool and provided support remotely to, for this telecable pays us commission in foreign currency. Please confirm the applicability of GST. Mr. Singh, you have to raise this separately. I am afraid we have to understand this transaction because recipient is somebody else, payer is somebody else, payment is in foreign exchange. Although I can tell you this, that GST law provides and for third party payment, but who is the recipient in this case has to be seen. Mr. Prashant Joshi says ITC has been availed for 17, 18, 18, 19, supplier not filed 3B. What are the alternatives available? Well, supplier has not filed 3B, but if supplier is in existence, then 42 subsection 3, DY Bethel Enterprises, Madras High Court, Bharti Airtel judgment November 2021, all of this comes to your rescue. However, if supplier is missing, then you are into a spot of bother. However, if your supplier is existing, then you can always contest on 42 subsection 3, DY Bethel Enterprises, Madras High Court. Mr. Rahul Patel says trial balance is mandatory. I have already answered this. Why do departments sending notice 1 and 3B when 9(9)C are in place? Well, 1 and 3B needs to be reconciled. You have reconciled it under 9(9)C, but department is not aware because the backup of 9(9)C is not provided to them. Mr. Jain says, suppose goods is received in March 23, but invoice date is Feb 23. Then whether we have to reverse ITC through 4B2 temporary reversal or we can directly deduct it from ITC availed under 4A5. You have to reduce it through temporary reversal, Mr. Jain, under 4B2. Mr. Deepak says, can you clarify Rule 42 reversal required for debentures matured? Is it considered as transaction in sale? Mr. Deepak, no, only in case debenture is sold, then it would be considered as transaction in sale. 42 read with explanation to Rule 45 is not applicable only in case debentures are matured. Mr. Prashant Joshi says, can condition of 16(4) restrict purchaser to avail ITC for 18-19 if GSTR 1 has been filed after due date? Mr. Prashant Joshi, there are obtained number of case laws in this. ITC of the purchaser cannot be restricted under 16(4) in this case. ITC, Ms. Smita Singh says ITC balance available in credit ledger can be claimed as a refund in case of closure of proprietorship business. Ms. Smita, I am afraid no. Mr. Ramesh says, okay, Mr. Deepak Kumar, thank you for ISD cross charge reply. Thank you, Mr. Kumar. Mr. Ramesh says, I am recipient where supplier issued invoice in 18, but filed 1 and 3B, but supplier paid tax after filing returns after August 2022. If supplier gives certificate under 183, circular is valid? Yes, Mr. Ramesh, circular is absolutely valid. and you can claim the benefit of this circular. Mr. Nagaraj says share application money of parent company more than 50%. Is GST applicable? Okay, Mr. Nagaraj, I would give you a one-word answer, no. But explanation to this is long and well, that has to be deliberated because there are various facets to this. Mr. Rahul Patel says under which law trial balance is mandatory. Mr. Patel, I have answered this section 71 of the CGST Act, read with rules 5618. I am sure you are not convinced with my reply, but that is why you are asking this again and again. However, well, this is my legal submission. Mr. Ravindra Thakur says invoice number reported in 2B not matching with invoice number in SAP. In case of warranty claim, can we take input? Of course, yes. No question about it. Mr. Chandan Balotia says services supplied to SEZ, what if full payment is not received from the customer? Full payment is not received from the customer, but you are supplying the services. So if you have not received full payment and if you are not disputing and if you are accepting that as full and final settlement, you can issue a credit note, no problem, under section 34. Mr. Ramesh says, sir, request you to have a separate video on various business issues under 2B versus 3B. Yes, we would be issuing a video very soon on this new 3 landmark judgments which have come and a roundabout on this 360-degree approach on this. Okay, Mr. Aravindan, this is the last question. Could join now, whether it would be possible to watch this video? Yes, it would be. So thank you very much to all the participants for joining, and we would see you in April. Happy financial year closing. Thank you to my team of Tax Connect and Will GST in Samir in absentia for holding this colloquiums on indirect taxes. We would have a direct tax seminar on the updates also very soon, and you would be intimated by our team with the links, etc. Do join, stay tuned. Thank you very much. Over to you, Moshmi.
Thank you, Vivek sir, for this wonderful deliberation. Thank you all the participants for attending the webinar. We conduct such webinars every month, and we hope we will get you in the upcoming webinars as well. We will shortly share PPT and video link to all the participants. Thank you.